is silver has lagged gold. And that is an indication in, through my experience and the studying of previous market cycles, that we're very, very early in this bull market. That when silver's move starts to accelerate, when silver starts drastically outperforming gold, all the indications are we have entered a new bull market, a new secular bull market, but we are in the early innings of that bull, and the evidence that supports that is the valuation of the gold equities and the silver to gold ratio.
Since the beginning of June, silver has begun to catch up with gold. After crossing $35 per ounce, the highest level since February 2012, silver's price hit its highest point in 13 years. According to most industry experts, the gold-silver ratio falling below 100 could have triggered the silver price spike. Due to strong industrial demand, persistent supply shortages, and increased appeal as a haven in the face of geopolitical uncertainty, the price of silver has risen by almost 23% over the past year. More than half of the world's demand is being met by the metal's expanding use in electronics, solar power, and other electrification trends, highlighting its long-term structural significance. Shawn Khunkhun, the CEO of Dolly Varden Silver, remains bullish on silver, believing this is a sign that we're still in the very early stages of a primary bull market for precious metals. Thanks to the bull run in gold, the ratio has stayed around 100 since January 2025. However, the long-term average for the gold-silver ratio has been around 70. Therefore, either the gold price had to fall or the silver price had to rise. Eventually, silver prices shot up, and today, the gold-silver ratio stands at 93, with the gold price at $3,411 and the silver at $36. The significant decline in the gold-silver ratio has triggered a bull run in silver. Khunkhun explained that when silver finally starts to take off and outperform gold, we often see a significant shift in the silver-to-gold ratio, sometimes going from 90-1 to 50-1 or even lower, like 40-1 or 30-1. He pointed out that gold usually leads the way in a bull market, driven by factors like economic uncertainty, inflation fears, and central bank buying. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Is silver has lagged gold. And that is an indication in, through my experience and the studying of previous market cycles, that we're very, very early in this bull market. That when silver's move starts to accelerate, when silver starts drastically outperforming gold, when the silver to gold ratio is measured, 50-1, 40-1, 30-1, that's typically, and again, history rhymes, it doesn't always repeat. And so we may be moving into an environment because of the growing industrial use of silver, that ratio, it dropped to 28-1 during the last cycle. So there was a moment where silver went to $49 in April of 2011, and relative to where the gold price was, gold was only 28 times more expensive than silver in that moment. Right now, the silver to gold ratio is about 90-1. So we've got a long way to go. You could argue that silver could triple without gold moving higher. But anyways, getting back to your question, typically keeping it very, very simple. In previous bull markets, the price of gold moves forward for various reasons, whether it's, systemic risk, whether it's a hedge against inflation, whether it's central banks buying. There's a whole number of reasons why investors flock to gold. And those reasons are alive and well today as we see gold at a record high in all currencies all around the globe. The gold producers become very profitable. The world's largest gold producer by market capitalization, Agnico Eagle, is today making $300 million a month free cash flow. So it's a very profitable business. And that is now trickling down. As they are depleting their mineral inventory, they're going out and trying to replenish those ounces. So there's a trickle-down effect. With the gold price moving up, the gold producers moving up, investors making money in those two asset classes, and then looking to take on more risk. And then you start to see junior producers, unfunded developers, and then in the final stage of the bull market, the exploration companies typically get a massive bid. So what I could say to the viewer who is new to the industry, who is new to markets, who is not a professional, If you're looking for, again, it's knowing and understanding yourself as an investor and the risks that you're looking to take on. I think what Dolly Varden offers is something that a lot of investors have celebrated in a world where we seem to be going into a more isolationist stance. Jurisdiction matters, and I think that's why a lot of investors have come and supported the company.
On June 10th, 2025, Dolly Varden completed a bought deal financing, totaling $28.76 million, led by research capital, with notable participation from Eric Sprott. The 2025 exploration program commenced in mid-May at the Quetzalt Valley project in British Columbia's Golden Triangle. It involves 4 drill rigs targeting approximately 35,000 meters of diamond drilling across Wolf, Moose, Red Point, Homestake Ridge, and the Big Bulk Porphyry Zone. An agreement has been reached to acquire over 20,000 hectares across 4 strategic Golden Triangle properties from MTB Metals, including American Creek, Silver Crown, Thea, BA, and Red Cliff. According to Khunkhun, this wasn't a random decision. It was a carefully planned strategy based on his 22 years of experience in the mining industry and his understanding of how markets behave when metals like silver and gold break out. He emphasized that the cost of this expansion was just a 2% dilution, meaning shareholders saw only a minimal increase in total shares, and the company maintained its cash reserves intact. Now, let's redirect our attention to a video.
Gold has done so exceptionally well over the last few years, particularly the last year. I think it's up around 75%, which is, a historic move. And silver starting to catch a bit as well. And we're starting to see the gold and silver equities participate, which is really encouraging. Now, there's typically, the largest companies are the ones to first recognize gold's and silver's appreciation because they're the big producers and it affects their bottom line more than it does the smaller companies. And so while the market was turning on, I made a decision to list our shares on the NYSE American Exchange back in April. And it was, it's something that I'd wanted to do for about 2 years. And I picked that moment in time because I wanted to increase our visibility amongst the U.S. investor. And as that U.S. investor, and what's interesting is there's only 10 companies that are listed on the NYSE American that are giving investors exposure to silver. So it's a very scarce, very limited pool. So when we got our shares listed, it was just at a time where, these metals became a lot more topical to Main Street. And so we saw an appreciation. And then while we got that bump, I used our shares and I went out and I significantly expanded our land position. So we grew our prospective land position by 6.5 times in size. Okay, so it was a very, very significant expansion. But it wasn't just getting good ground. In the process, we acquired 3 past producing silver mines, one being the richest silver mine in the district. So we went through this. It was very deliberate. Like, this is something that you mentioned. I've been in the industry for some time. It's been 22 years. And so studying how different market cycles have reacted in the past when metals start to break out and different ratios, silver to gold and gold to the S&P. And so what was interesting is for what cost the company 2% dilution, we grew our past producing mines, going from 2 to 5, going from 15,000 hectares to 100,000 hectares. And we did it at a cost of 2% dilution, not parting with precious cash, but using our recently appreciated shares post NYSE American listing. And that enabled us to, so these are all very positive. So, we've been very busy the last few months, uplisting, making acquisitions, financing, and on May 15th, we started a drill program up in the Golden Triangle.
As global debt continues to balloon and confidence in fiat currencies wanes, investors are increasingly turning to hard assets like gold and silver. Silver, being more affordable than gold, often sees bigger percentage gains during precious metals bull markets. Silver's industrial industrial use case continues to support the metal fundamentally. Its role in solar technology and electronics remains robust, with trade headlines also carrying weight. Progress in U.S.-China negotiations, particularly a framework allowing rare earth exports in exchange for easing tech restrictions, may limit silver's safe haven appeal in the short term, but enhance its industrial demand profile, especially if supply chains normalize. Is now the time to load up on silver, or are we still too early? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed.